Good evening, everyone. On behalf of HSBC, I would like to welcome you to the webinar, Asia Supply Chains, A New Era in India, where we have business leaders from HSBC and the industry come together to share their valuable perspectives and engage in insightful conversations. Do note that this session is being recorded. My name is Soumya Saraugi, and I will be your host this evening. The session will feature opening remarks from Hitendra Dave, General Manager and CEO, HSBC India, followed by a presentation by Ajay Sharma, Regional Head of Global Trade and Receivables Finance, HSBC Asia Pacific. Thereafter, we'll turn to a lively panel discussion with three industry leaders, moderated by Rakesh Patwari, Head of Business Development for Global Trade and Receivables Finance, HSBC India. Finally, we will open the Q&A session. Throughout the session, you may post your questions in the Q&A tab at the bottom of the screen, and we will address the same during the dedicated slot at the end. A friendly reminder, this session is being recorded. I will now hand over to Hitendra Dave, General Manager and CEO, HSBC India, to deliver the opening remarks. Over to you, sir.
Thank you, Soumya. Good evening, everyone. Welcome to this event on technology in supply chain. I think it's absolutely the right time to have this event, and I'd like to thank you all for joining us today for this conference. And we've got some really great speakers lined up, and hopefully there'll be a lot of participation through questions, suggestions, debate, and challenge, etc. I think from my side, I would just say that I think supply chain has moved away from just being a product that treasurers and buyers and purchase managers talk about to now becoming a very serious issue now, even at board levels. I think who would have imagined that for absence of let's say a 1-inch or 2-inch big chip, we could not have trucks being produced, motorcycles being produced, cars not being produced, lots of things, right? That's from that angle to now what we are experiencing, lack of supply of gas in Europe, clearly tells you something about having 100% dependency of a critical component like cooking fuel, fertilizer, as we are discovering in India. So it is not just about a consumer, it is not just about factories or purchase managers or even boards. It is now becoming increasingly about larger country level dependencies. I mean, fertilizer for us is supply chain at a country level. Oil for us is a supply chain issue at a country level. So things of that nature. So I really hope the discussions and the panel discussion brings out a lot of these issues. I think the other thing from my side, and obviously I represent the banking industry here, is what exactly does finance do in such a critical subject? We know that when you say technology in supply chain, increasingly, as my colleague and friend Rakesh educated me last night, was the fact that increasingly technology is being used to predict demand using artificial intelligence, machine learning, robotics, data analytics, etc. And I think what I would sense is once technology has enabled somebody to predict demand, that's where I think the finance or the banking industry or the supply chain financiers come in, where you could say we just embed ourselves in that journey. So it's not like a special product that you pull in and pull out of, but you're almost intermingled with the business as it happens. So the moment an order is received or the machine says order is going to come to you tomorrow, the same very moment a ping goes up to the supply chain financing bank that we will have a requirement tomorrow. This is the buyer, this is the seller, etc. I think lots of things have happened in supply chain from what we were taught when we were young, just in time, the great Japanese technology to bring down working capital costs and to make processes more efficient, to now where maybe the minimum amount of stock you hold is much higher given what the recent events have taught us. Also from extraordinary amount of globalization, where you just go for the best producer in the world, even if it's a nut bolt produced somewhere in Venezuela, to now having much more geographically closer supply chains, wider supply chains, etc. Obviously, there's a new angle of sustainability of supply chains. I was talking to somebody in Germany who was telling me that German law now is going to require that any German company has to ensure that its entire supply chain is also sustainable. How is sustainability measured? How is it disclosed? How is it visible? So all kinds of things are there. This is a fascinating subject. I really look forward to hearing the panelists and our other moderators and their questions. I wish the event great success. And thank you once again for joining us. Back to you, Soumya.
Thank you. Thank you, sir. We'll get to our next presentation in a minute. Before that, here's a quick poll. We'd like to seek your views on What is the biggest factor influencing supply chains today? Okay, we'll wait for the answers to come in. Okay, we end the poll. Yes, we have the results. So it's interesting to see that people on the call feel that geopolitics and logistics challenges are the biggest factors influencing their supply chain. With this, I'd now like to call upon Ajay Sharma, Regional Head of Global Trade and Receivables Finance, HSBC Asia Pacific, to provide some additional context. Over to you, sir.
Thank you, Soumya, and thank you, Dave, for the introduction. A few things. The poll really shows the importance of geopolitics and what's really happening in the world today. We did a survey, and I don't know if you can see the slides, but we did a survey of 400 of the largest companies across Asia Pacific, across 10 countries. And this was in the fourth quarter. And one of the key things that came out was that COVID-19 remains the number one factor impacting supply chains. Obviously, events have overtaken that sense, and the Russia-Ukraine war is probably as important as COVID-19. As COVID-19 recedes, I think the impact of what's happening in Europe is going to be equally difficult for all of us to navigate. And the challenges then were around economic slowdown, around just the regulatory challenges that were beginning to be increased, and the currency volatility that came along with that. Today, I think we talked about logistics and the issues. I would add raw material shortage. I would add inflation. I think inflation is becoming as big a challenge as any as we look at a supply chain. Can we pass these costs on? How do we minimize the costs? And what hasn't changed is that the companies that we deal with continue to move their supply chains closer to home, more into Asia, but they're also reducing the number of partners that they have to make sure that they're dealing with the strongest partners, that the partners are resilient, they have the financing. And when we did the survey, what really came out that there's a huge requirement for financing. Today, that in addition to the financing that our customers require, there is a great need for mitigating risk, because the risk, not just around currency, but around counterparty risk, around making sure that the supply chains have enough liquidity, are becoming far more important to the companies that we deal with. So quite a change just in the last 6 months. And that's what we've been through over the last 2.5 years. And what are the big trends that we are seeing? So if you go to the next slide, and we talk about digitization, and the number of customers who expect the supply chains to be digitized, or the increasing level of digitization in the supply chain, is 76%. 3 out of 4 clients are looking at that. That's huge. And they're using it to make sure that they can upgrade the legacy systems. They can get real-time delivery alerts. So David talked about a ping coming through that, going to the bank or going to themselves. And that is really to improve the inventory management so that you're not carrying excess raw material, just carrying the right amount. What we're also seeing is companies, e-commerce companies broadly, but companies who are using online sales, they're using far more digital tools to, one, integrate with the supply chain partners, but they're also doing much more to enhance the customer experience. Whereas traditional companies are just looking to just manage the ecosystem, the supply chain ecosystem, and their focus is more local raw material, etc., etc. And finally, the topic of sustainability on the next slide, where when we talk to our clients, only a third of them said that they have an environmental or green policy in place. And I think that number has significantly gone up since. But the big concern they had was they did not have any real metrics to measure whether they were doing the right thing, whether they're being successful. How do you measure progress at all? And very few, 1 in 20 of our clients only, had a sustainable supply chain financing solution from the banks. And many of them said, we really don't know how to measure. There are too many barriers to this. We need to be consistent. How do we make sure we're doing the right thing? So very interesting insights. And therefore, what we have been doing over the last 2.5 years through COVID, but more so in the last 12 months, is focusing on sustainability as a key area of focus for the bank. We have to help our customers with the transition journey. We've been doing significant amount of deals in this space. And again, we are happy to share the greater detail of this report with each of you as we have more dialogue with you. What we have also done is put together a panel of experts. So I will stop here and hand it back to Soumya for the panel discussion.
Thank you, sir, for the insights. We will now move on to our panel discussion on tech and supply chains. A quick introduction to our panelists. Joining us today are Aditi Puri Batra, Chief Business Officer, Tata Business Hub. Aditi's forte has been building and scaling businesses from ground up, having worked with the likes of Amazon, Google, and leading media houses previously. Our next panelist is Rahul Jain, President and CFO, SRF Limited. Rahul has extensive and intensive experience across the finance domain, including treasury and cash management, FX and interest rate management, offshore fundraising and FCCBs, private equity, and M&A. Our third panelist is Sandeep Mohindru, CEO, M1 Exchange. Notably, Sandeep is also the founder director of M1 Exchange and Mind Group, part of NASSCOM SME Council and CII FinTech Association, and brings valuable perspective of designing and delivering industry-wide tech-enabled finance solutions. And finally, our moderator, Rakesh Patwari, Head of Business Development, Global Trade and Receivables Finance for HSBC India. Spanning over 19 years across assurance and banking, straddling roles in India and Hong Kong, Rakesh has vast wholesale banking experience. All yours, Rakesh.
Thank you, Soumya. And thank you, Ajay, for sharing the insights. Supply chains today are ever more important. And this is getting more complex with every passing day. We started off with the US-China tariffs, we moved to COVID, then we talked about commodity prices, then we talked about geopolitical risks, and it's a long list, so we can keep talking about the long list. We're going to spend the next 20 minutes today or so talking about how technology can play a role in the ever more complex trade and supply chain ecosystem. And therefore, thank you, Aditi, thank you, Rahul, and thank you, Sandeep, for joining us on the panel this evening. Thank you. I'm going to start off with you, Rahul. SRF has a complex multi-product, multi-currency, multi-geography supply chain ecosystem. What role does technology play, right? Or how can tech and data help a complex supply chain like that of yours or corporates like yourselves?
So thanks, Rakesh, and thanks for the introduction, Soumya. So Rakesh, I believe it's important to not just involve tech, but also ensure simplified and a robust supply chain from a business continuity perspective. What we've been able to do over a period of time is ensure multiple programs that are in place for our suppliers to be able to get kind of upfront financing for the SRF acknowledged receivables. We've also enabled our suppliers to be able to leverage our balance sheet through various programs, which are both in the nature of bespoke and automated, so that we can, so that our suppliers can leverage the strength that we have. Supplying to our organization also kind of makes the supplier stickiness very, very significant. We've leveraged multiple tech platforms for setting up bidding processes so as to ensure that there is liquidity available to the suppliers. At the end of the day, money is commodity. And to that extent, it adds value only when churned through multiple cycles. What you've also spoken about is the current geopolitical situation, which is creating certain disruptions. Some of them controllable and some are not. Energy prices, for example, have not just inched up, but kind of gone through the roof. we've seen multiple disruptions from a country perspective. Sri Lanka's default recently, for an instance, have led to broken supply chains. I think ensuring business continuity through each of these cycles becomes of paramount importance. Uh, Again, agility on supply chains and agility through tech, ensuring appropriate risk management measures is the need of the hour, which we believe can be managed through tech interventions, which is what we've been doing over a period of time. So I would really look to say that technology, ability to harness data, is something that we are looking to do and have been doing over a period of time. Over to you, Rakesh.
Oh, thank you for that, Rahul. I think great point you make, which is not just financing, but beyond financing, the role of technology in supply chain, and this probably applies to a lot of companies of your size and complexity. I'll come to you, Aditi, and I want to focus in any ecosystem. There are large companies like SRFs, and there is a plethora of ecosystem partners, which are SMEs or SMBs, as we call them. In India, and we all know SMBs contribute 30% of India's GDP, as critical as they can be for the economy and the country at large. At Tata Business Hub, your aim is to enable this SMB ecosystem, right? And my question is non-finance, and I want to focus on resilience in general, and I'll come to finance in a moment. But what role do you say data and tech can play in making the SMB ecosystem more resilient? Because their resilience drives resilience for the larger supply chain ecosystems.
Thanks, Rakesh, and firstly, thank you for having me here. It's an honor. So great question, Rakesh. You're right. Supply chain or small businesses, we actually call them emerging businesses at Tata Business Hub. They are truly key growth pillars of the nation, right? Combined consolidated spending of emerging businesses across the country is 90 lakh crores on an annual basis. Together, they're contributing to close to 50% of the manufacturing and export throughput of the nation. And for one segment to do that, as Ajay was saying, that's huge and sizable. Now look at this statistic, right? Now we know that any small business that is digitized, their profits are twice. We also know that digitized small businesses, they're more successful in expanding to geographies beyond where they operate. And to the point that Ajay was raising, they're greater contributors to GDP. So take a country like Brazil, 55% digital adoption, close to 50% contribution from a GDP perspective. India is at 30% because the digital penetration or the tech penetration is only at 8%, right? So clearly, tech is a big enabler. Government has undertaken many initiatives to make supply chain more globally competitive. But at the same time, at Tata Business Hub, in our interactions with thousands of emerging businesses, what we've learned is that they're facing many challenges, right? You've talked about credit and financing as a challenge. There are challenges around finding talent. There are challenges, basic challenges like staying informed or, even running processes manually. I mean, would you believe it? Emerging businesses would be spending 4 to 7 days in a month just doing manual reconciliation, right? That's a huge amount of time. I believe, or we believe that technology can be a big enabler here and be a big solver, both saving them time as well as money. And my belief is that, players or companies that use technology and data to build platforms that are looking at supply chain problems in a holistic manner is the need of the hour, right? So solve for trade, solve for financing, solve for enablement. So for example, at Tata Business Hub, we're looking at 3 key pillars in terms of solving and helping enable the emerging business segment. One is, how do we help them grow, right? How do we help make connections or get them new leads or customers? That's one big area that we're trying to solve for. The other is, how do we help solve their challenges, which could be around credit, could be around learning, could be about, helping them, equip them with the right tools. And the third is how do we help optimize and digitize their processes? So, all in all, I think my belief is we need more and more of that, and more players coming to the fold, building platforms which are holistic versus solving part of the problem.
No, thanks a ton, Aditi, for that. It's interesting, the three things that you mentioned didn't talk about financing at all, right? The three things you talked about were non-financing, and I'm going to come to the financing part of it in a moment, but thanks a ton for that, Aditi. I'm going to pivot to you, Sandeep, and we talked about problem statements from supply chain in general for corporates, and we talked about SMEs. Let me move to financing, because that's an important enabler in the process. M1 Exchange sits between corporates and MSMEs, right? Enabling access to credit to MSMEs, as I would put it. And tech is at the core of your business model, right? What's the future of M1, if I may ask you, and more generally and specifically for the wider trades ecosystem? What's the future for trades, and what's the role of tech and data in that journey, Sandeep?
Right. Rakesh, if I knew my future, I would have bought it today. Well, I'll give it an attempt. So to understand the future aspect, I'll take one or two steps back today. So as on while we are discussing, people log in India from 900 cities to do their invoice discounting on M1 via their mobile phone. And these are the cities I haven't heard of. In, like first 200 cities, one has read them in some paper, some format. Balance 600, 700 cities, I haven't, they're not so common cities. So that's the power of digital. And like Aditi was saying, the challenge is huge with the MSMEs or SMEs in our country. So digital is the way to make a financial inclusion reach to every city, even if they have a working capital limit. But let's say getting a sales receivable discounting done is something that they've not heard of or they've not experienced, and they will never get to experience if it is not digital. Many of them will never get to experience if it is not digital. So having said that, the second side, like I said, step backward, is that today 44 banks are financing on trades oblique M1, right? So the pool of financiers, the liquidity pool, and that pool is attending to different kind of industry. So someone is very gung-ho about, let's say, white goods. Someone is very good about, let's say, auto components, automobiles. And some may not be interested in gold and bullion. Some may not be interested in real estate. So the 44 as a pool cover every aspect of the industry. So that's another big side which gets attended through a platform like M1 oblique trades. And the third side is that in 4 years, out of, let's say, 76,000 crore, which has been funded on trades, the default is not more than maybe 200, 300 crores in total, right, in 4 years. So it's a win-win for a banker. For a SME, of course, it's a godsend kind of a thing, because I mean, from 900 cities, he's getting his invoices discounted, and without courier, without phone call, everything getting in digital format, the money gets transferred to his bank account, and then a pool of liquidity. Now, when all of this is happening, I think future is glorious, because it's solving the purpose of all the three players. Why should anyone now reverse back and say that I want to not do it when he's already getting these benefits? Now, from a bank perspective, a bank able to service SMEs, which his policies otherwise may not have permitted him to service in 900 cities. He may not have the wherewithal or the infrastructure to even attend the phone call of people calling from 900 cities. Right, or doing a KYC in 900 cities, or signing a loan agreement in 900 cities. I mean, why would a bank would want to reverse this kind of a trend, or a supplier would want to reverse this kind of a trend? Now the corporate whose supplier it is, many times or in the past have been doing bilateral financing, right? So one bank or two banks at the most, one technology, second technology. Now, once they are getting a pool of 44 banks and there is a price discovery which he is able to establish today, and it enables a many-to-many relationship. That means once onboarded, he continues to churn as many suppliers as he may want. He doesn't have to worry about, have you given your loan agreement? Have you given to bank 1 or bank 2 or bank 3? So it's a convenience for him as well. And if his supplier is getting reduced cost, and in turn, he will benefit because his supplier's costing is coming down. So his bottom line is also improving. So that's the reason now it is going up in multifold. In the presentation, even Ajay has reflected that the out of 300 corporates, maximum number of ones are now wanting to do receivables and then PO financing. So these trends are reflective. Yes, this is going to stay. This is going to go further beyond this, and we are witnessing it. I mean, earlier we used to take. It used to take us almost 3 months to make a corporate and its vendors live, active on a platform. Today, broadly in a week, max 10 days, everybody goes live once the program is up and running. So that's a kind of a time difference it has crunched down. Before Corona, we used to do like 100 crores a month. Today we do 100 crores a day, right? So that's the kind of exponential adoption it is happening with the corporates. 40% of the business is being done by the AA rated and AAA rated companies, their suppliers. And 60% of the business is being done by single A and below. Earlier, the trend was 80% used to be single A and below, and 20% used to be AA/AAA. Now it is 40-60. So these are the trends which are reflecting that the adoption is benefiting the industry. That's how people are adopting. I would sum up like this.
Two things that stood out for me when you were speaking, Sandeep. One was 900 cities, which is technology. And the second that stood out for me was the fact that you now have credible data on default rates, right? Which just creates people more confidence in terms of participation. On that point, I'm going to come back to you, Aditi. And you talked about resilience for SMEs, SMBs, or emerging corporates, as you call them in general. Pivoting to financing for emerging corporates, right? Could you share a couple of use cases on how tech can help financial resilience for SMBs from a forward-looking perspective, and would be useful if you could talk about what are the building blocks that are needed for this, or what are the dependencies for the financial resilience of SMBs?
Yeah, sure. I mean, Sandeep touched upon TREDS as one of the tech enablers, but I mean, financial inclusion is a big problem, right? 80% of emerging businesses don't have access to formal credit. Their credit applications, or when they apply, that gets rejected. So to the point that you were making earlier, the credit gap today is 26 lakh crores, despite of so much happening in the fintech space. And if you look at some of the problems, it's around I don't even get to know whether I'm approved. Is it a yes or a no? And if I am getting a loan, it takes me around 2.5 months to get a loan. Now, to the point that Ajay was making, if I need to buy raw materials to cater to a new customer, I cannot be like waiting 2.5 months to get a loan, right? So that's the extent of the problem. Now, coming to use cases, I think one example, for example, is qualifying the qualifying norms, making them more business friendly, easier for basically making the approval rates for loans to go up, right? Now, if we look at traditional lending, they are still relying on traditional income documentation, be it audited financials or IT returns, paperwork, etc., to extend a loan. Now, that's not financial inclusion. Financial inclusion is making credit available to more and more people by taking an informed sense of the risk. And some of the new age fintechs and NBFCs have realized this. So they're using AI ML to deeper analyze bank statements on their own, look at transaction data, look at behavioral data for profiling and getting sense of the risk, to the point that Rahul was making earlier in terms of risk management. I mean, look, I think data is the key. As an example, at Tata Nexark, we are looking at our own transaction data. We are also, getting data from other Tata Group companies, and we have the advantage of that. But what that enables us to do is underwrite credit for a larger pool of MSMEs that are seeking credit solutions, right? So, what are the building blocks? Obviously, the borrower data has to be digitized, right? So that transaction data, needs to be available. That's one. The borrower needs to be open to sharing that data. And then an ecosystem of players where that transaction data potentially can be available, is important as well. So, I mean, that's one use case. I think another important one, which we are solving for, is, quick liquidity solutions. So if I'm an MSME and I need a loan in, 3 to 4 days, my bank limits are exhausted. There are very few, formal lending options available. And if they are, they will ask for collateral. Right? So that's one of the things we're trying to solve for. Again, I think ecosystem, and we are partnering with strategic lenders to enable this. And I think Oaken, from a enablement or how this will happen, Oaken is going to play a big important role here. Progressive lenders, APIs from banks are all things that will help make it happen. But I mean, to me, disruption is, how can you, tell an MSME or an emerging business that yes, in less than 5 minutes, you're approved for a loan, and this is the loan that you can get, right? And completely digitized process. So that's true disruption, in my opinion.
Thanks for that. I think we're spending a fair bit of time and energy of ours at HSBC to ensure that we're responding to the change at the pace at which we need to, and we've had conversations. So I can't agree more with you on that. I think thanks for that. I'm going to change gears, and I'm going to come to a topic which probably after tech is, and I'm not going to rate the two, but it's probably one of my subjects that I'm most passionate about, and that's the elephant in the room. And if we don't talk about it, it's an incomplete conversation. That's sustainability. And I'm going to come to you for that, Rahul. And I think Ajay referred to it, and I think he mentioned that companies who have sustainability priorities, 41% of those companies do not have the metrics to measure success with regards to sustainability, if I recollect the data correctly. And I'm seeing, and we're seeing a significant increase in dialogue with regards to scope 3 emissions, which are a lot more about supply chains and so on and so forth. How do you see tech and data, Rahul, playing a role as an enabling partner in driving sustainability in supply chains?
So thanks, Rakesh, for the question. Absolutely right, and Ajay pointed it out in terms of sustainability. What seems to be happening to my mind today is that we are all talking about buzzwords like sustainability, be it sustainability, ESG, green, and multiple other terms that are today being used and leveraged by investors, banks, mutual funds, or MFIs, etc. What's also happening is that ESG is becoming a key metric for not just let's say from an outside-in perspective, but from an internal perspective, at least at an SRF level as well. Our intent is to actually look at integrating most of our business processes from an ESG perspective. It is something that we have talked about internally, something we are discussing on a continuous basis. There is also an exponential increase in the number of frameworks that you have to deal with today, be it a Hsbc or a GRI or a CDP, UNGP, and there are many others that we talk about. But what's also happening is that each of these frameworks have a different review mechanism, and there is no single window or a framework that works worldwide. I think there is development happening on that side. There is a positive traction that is being developed. That's something that we are also looking at. What we believe has to be done is that companies need to be able to adopt to a or adapt to a agile mechanism that helps them scale their reporting methodologies. I think again, like you said, technology is a key element here. With the help of technology, we need to capture certain key parameters and reports that and are looking to ensure that multiple frameworks requirements are met. It's practically pretty difficult to be able to meet all of the requirements, but you have to be able to set up your framework where you believe that you are doing a good job from a sustainability perspective. Use of technology, again, like you said, ensures that reporting is done in a timely manner and in a comprehensive manner, and on intervals that are acceptable to most of the, let's say, external world. I also believe that data visualization and interactive dashboards play a key role in terms of putting up your data and people looking at that data. Like you also said, technology, data, all of that can be prioritized and required to suit the needs of various groups. We have various websites. We have our annual reports that have come through in terms of our sustainability practices, in terms of our ESG practices, dashboards, dynamic infographics that we are putting up are some examples of ways where we are looking to engage with all our stakeholders from a sustainability perspective. Again, supply chains, like you also said, have to be sustainable. All of our, let's say, key suppliers, we are also looking to engage with them from a sustainability perspective. What are they doing, and scope 3 and various other requirements from a sustainability perspective, we are also engaging with them. It's a long drawn exercise. It's not something that can be done overnight. But I think the thought process is to be able to engage with the suppliers, to be able to look at where their sustainability methodologies are and develop them as sustainable suppliers going forward. It's, like I said, long drawn, but certainly comes through over a period of time.
No, thanks, all. That was extremely comprehensive. I would just add one bit to that. I think the data also helps when you try and overlay financing from a sustainability perspective, because when you're trying to do sustainability linked loans, or you're trying to do sustainable supply chains and so on and so forth, having transparency of the data also enables a different class of investors and financial services, whether be it equity, be it debt, etc., come into the party.
I agree completely.
Thanks, Rahul, for that very comprehensive answer. I'm going to go back. The last question before we open ourselves to Q&A, but this is somewhere the pieces that Rahul referred to at the beginning about giving the ecosystem the benefit to price their receivables. Sandeep talked a lot about trades, of course. Aditi talked about the enablers. And then when you look at what's happening today, there are a flurry of experiments / innovation that's happening in India. It's straddling from trades to supply chain platforms, to B2B marketplaces, to other fintechs, to banks and NBFCs responding at different pace. My questions to you, Sandeep, and maybe I'll ask Rahul and Aditi also to supplement at the end. A lot of this experimentation is great. It allows a modular approach. It allows acceleration with regards to innovation. But some of this also needs to converge at some point in time into what a end product may look like. So if I may ask you, where do you see the convergence of all of this, and how will it weave together? It's a tough question, and you mentioned if you knew the future, you would buy it today. But I'm trying to take a guess at what the future may look like.
You're putting all the future questions to me.
You're the visionary in the room, Sandeep.
So no, good question, Rakesh. And actually, we have built all-in-one supply chain finance solution from all corners today. One is the trades, which you are aware about, which is M1. Second, because we are serving an enterprise, a large enterprise, and in trades we are serving their suppliers. Now comes their distributor dealers, which traditionally is called channel finance. And that is another technology layer which is added by Mind Group, which therefore comes as a single sign-on for the large enterprise. So there is a buy side and there is a sell side for an enterprise. The third side for an enterprise is a import export, which is an international trade. And again, from the Mind Group, we have set up an entity in the Gift City and just about to start, which is again about the import export supply chain finance. So if you look at it from an enterprise, all three points are covered. And the number of financiers, like I said, is let's say 44. So it's the same set of financiers who have a trust on that corporate and its business life cycle. So therefore, they are taking a risk both on the buy side, on the sell side, on the import export side. So going forward, we envisage the next upcoming stage will be that an enterprise is able to get a single user experience, more convenience to integrate with one platform, which is taking them to multi-channel of financing on all sides, whether it's a buy or a sell. So this is one side. The second interesting side from a smaller enterprise perspective, and which we just experienced a couple of weeks ago, is that a smaller enterprise today, we used to onboard him only as a supplier. Mostly, I mean, that was the use case. He's a supplier to a large corporate or to another corporate, and therefore he's onboarded as a supplier, and all his agreements are signed digitally like that. Now we've come across few use cases in the last few weeks is where a small enterprise is a seller as well as a buyer. Something what I was just talking about, a large enterprise, and that has like forced us to change our technology further and look at a same person, smaller enterprise, from the same lens of buyer and a seller. Now, because his data exists on the platform from last 3 years, 4 years as a seller, now his data can be utilized to open finance for him for his buy side, which is in a way you can say is also enabling or working towards PO financing. That means he's got an order and therefore he has to buy, and therefore we are enabling his buy side. So there is a network which in turn is getting created, hopefully, which will play by its own book over a period of time, where there is a large enterprise sell and buy, small enterprise sell and buy, everything is getting a coverage on a single platform. And from a bank perspective, if he's looking at the data from an enterprise perspective, buy and sell, he can take a bigger, larger, better decision. So this is where, at least in the short to medium run, we are seeing things moving in that direction, demand coming from that direction. That's all I would say.
Thanks, Sandeep. The hypothesis that, and I'll ask Rahul and Ajay to chip in, is one hypothesis, winner takes it all, but the other hypothesis is that everybody comes together and is a winner together, right? And Rahul, your views on that piece, and Ajay, your views on that. If I may ask Rahul to go first.
So thanks, Rakesh. But just one comment, I would say, Sandeep, you are eating away into Rakesh's business and all other banking business as well. So congratulations on that. Hopefully, the automation will take it to a level where, let's say, every SME in this country will become bank agnostic, which is what you are trying to get to. Right, and many congratulations on that. But I think one of the key measures that we have to also look at is risk management from a corporate perspective. I think, and I kind of alluded to it earlier as well. At the end of the day, from a corporate perspective, we have to also look at where our balance sheets are. And I'm talking about decent sized corporates rather than pure MSMEs, because the churn that is required from a supply chain perspective, both DSO and DPO side, is something that I believe is very, very important. I think the regulation that we are now starting to see in the country is also changing to that effect. We've recently seen the insurance guidelines that have come in. Hopefully they will be enacted soon, and we will have the ability to insure some of those pieces and really look at managing the risk on our balance sheets on a more continuous basis. Whether you are doing a B2B or a B2C or a D2C business is something that we will all have to look at and kind of evaluate our business risk and take some on our balance sheet and take it forward. Liquidity remains a key element around it, and cost of liquidity also will probably become the key element with the interest rate rising cycle that you've talked about, that we are seeing. So hopefully things will fall in place from a tech perspective, and we should be able to do a better job.
Thank you, Rahul. Aditi, I will come to one of the things that Rahul mentioned, but I'll ask one Aditi to first comment first.
Yeah, thanks, Rakesh. I mean, look, I agree with both Sandeep as well as Rahul, right? I believe from a medium-term outlook perspective, we are going to see more and more of inter and intra-domain collaboration, right? That could be between banks and fintechs, or fintech and fintech. Like we, as a tech platform, are working with Sandeep already. As well as enablers like insurance or logistics. And in addition, to your point, we may see healthy consolidation and M&A happening as well, right? I mean, look at the acquisition of expertise by Clear. That's an example. Overall, I also believe that we will see players emerging that are looking at the bigger picture and potentially looking to build out super platforms which are offering a finance plus experience to small businesses. Now this could be come to the platform, take care of your trade, which is buy, sell, from a buyer and seller perspective. Come get your financing needs addressed. But at the same time, you also have enablement solutions, like logistics was one of the challenges that was called out in the beginning, right? My sense is that these super platforms which are solving multiple challenges more likely to win and succeed than others.
Thanks, Aditi. I think my takeaway from the three of you is that I think we yet to figure it out, right? Because clearly, I have my views and I'm going to hold them back for this conversation because I'm moderating. I'll only add to what Rahul's mentioned is that the insurance regulations have actually come in play, and I don't want to be cute on this call, but we've done the first in the country, right? Wasn't my intent and wasn't planned for the folks who are the audiences here, right? But thank you for being a fabulous set of panelists. We've got a few questions, and we're going to try and squeeze them in the next 8-10 minutes. And if I may request Ajay to come back onto the screen as well, because we'll have probably some questions for Ajay as well. Thanks, Ajay. And I'm going to read them out as they've been sent to me. So first one's to you, Aditi, right? And the question is, how do you see other large conglomerates like Tata's in India evolving with their own platforms to support ecosystems? What's your view on that?
I think we need to play a major role, right? Some of the things I've talked about is we are looking at Tata Business Hub. I mean, our company is fully focused on solving for emerging or the MSME segment, right? And we are looking at solving for challenges. We've built out a tech platform which is looking at solving challenges in a holistic manner. And there are three areas which we believe are key pain points in our experience of having met many emerging businesses. One area is around helping them grow, which is giving them credibility, connections, ability to expand beyond their geographical location and find new customers. That's a key pain point. Like sales, how to do sales just comes up like right on top, right? Second is helping them solve their challenges. And Rakesh, you and I talked about this. Challenges could be financial inclusion. That's a big one. But even know-how in terms of information about my industry or compliance norms, etc. So, one of the things, for example, what we're doing is we're setting up a service, which is basically a panel of advisors across different topics, which are experts in those topics, which will be available for MSMEs, right? Or challenges could also be in the area of recruitment. Finding the right talent or raw material sourcing is a big pain point, which we're looking into. And then the last one is helping them digitize. And that could be through apps, it could be software solutions, do-it-for-me solutions, etc. So those are some of the areas that we're investing in. And I think, more and more players need to do that to be able to solve, and ecosystem needs to come together as well.
Thank you, Aditi. Rahul's one question's come for you. This question's on what we're seeing outside of India, which is corporates in overseas markets are looking at fewer strategic suppliers and partners, and they're nearshoring. What has been your experience, and are you seeing a similar trend closer home in India?
Yes and no to a certain extent. So what you're talking about, Rakesh, is the fact that see, again, I would go back a few years. We were all talking about only globalization, right? I think Ajay mentioned it. What's also happening is localization. So yes, there are key larger players that are looking at more localized supplies, more strategic partnerships that they are coming through with. However, I would also say that people are becoming agnostic from an MSME perspective in terms of the quality uh, and the ability to supply of certain products. So it's working both ways. I think from a large industry perspective, yes, we are seeing a positive in terms of generation of more leads from a large entity perspective. While from a entity by entity perspective, we are also seeing a fact that larger number of MSME kind of suppliers, you are kind of getting agnostic to where you are. Just the product and the quality of the service becomes important. So that's how we are seeing it overall.
Thanks, Rahul. Sandeep, the question for you, which is with the pace at which the fintech space in India is accelerating, what is your view on how do you see the regulatory landscape evolving in India in this context?
Yeah, so regulatory landscape, as we're all aware, is evolving very fast on the fintech. And every few weeks, a regulation is coming out, which is kind of involving, engrossing these fintechs as the important player in the fintech, in the finance industry. Like in our case, we are exposed to all kind of audits and the same KYC norms and almost every technology related norms and the audits that a bank is exposed to. And rightly so, as so much of data is flowing through our platforms. And we are also seeing that the norms that are coming out from the RBI or from the other such bodies are about data privacy, are about compliance norms of capital norms, all these norms that are applicable on these fintech platforms. More and more logically, if you look at it, there have been few instances wherein some Chinese apps have misused the COVID era for granting high loans to the individuals via digital apps, and there have been some few untoward instances of recovery that they've done. So since then, the loan disbursement apps have also come under the notice and the purview of RBI. And this is a global phenomena. I don't think this is only specific to India. Most of these developing countries are experiencing it. Even UAE is experiencing many of such norms coming up in the recent past. So this is going to stay, I would say, and this is going to make the system more robust, not make it where it falls down if any such challenge comes up, because it is making us more and more solid in terms of compliances. So we are being pushed to do as much compliances actually.
Thanks a ton, Sandeep, for that. If Ajay, the last question that I'll take, I'm conscious of time, and this is the question is asking HSBC's perspective. The bank brings scale and reach across its clients. What is the bank's philosophy in bringing latest technology? Is it build, partner, or buy?
I think it has to be all, right? So we cannot claim to be subject matter experts on everything. So we are always happy to, traditionally we've rather built, and that's not always been the most optimal way of doing it. We'd be happy to buy, but I think the more important area to work with is to actually partner. And we do partner with fintechs and we do work with them, and sometimes their domain expertise, and often I think the ability to work in a quicker manner than HSBC would work or any other big bank would work, I think is what attracts us to do these partnerships. And we have many partnerships across the world. So I think increasingly we'll see more partnerships rather than trying to do things on our own.
No, thanks, Ajay. I appreciate it, and I'm conscious of time. We won't be able to take more questions on, but thank you, Aditi. Thank you once again, Sandeep. Thank you, Rahul. Thanks, Ajay, and thank you, Dave, for being phenomenal on this conversation. And thank you for the audience for being such a fab audience. I apologize for not being able to take all the questions. We look at the questions, and if you want us to answer something specific, please reach out to us directly. One last request before we sign off, which is I'll request that once I finish talking, you'll see a survey link pop up on the screen, and therefore please take a minute and answer that survey. But thank you everyone for listening in, and wish you all a great rest of the day.
Thank you.
Thank you. Thank you.
Thank you.